Hello everyone. Good afternoon. Good afternoon everyone. Can you all hear me?
Yes, sir, we can hear you.
Yes,
All
I
right.
can hear you.
All right. Thank you
Yeah.
very much for that. Um,
Yes, we can
once
hear
again,
you.
once again, good afternoon. Thank you everyone. Once again, good afternoon, and welcome to yet another class, right, for the JIIPCC Mentorship and Internship program. This we're already in the fourth week of our third and fourth quarter, and it's such a pleasure having everyone in session today. I am happy to see we have quite a number of people on call. Please, if it's possible, I would like to ask that our mentees reach out to the other mentees on the group who are yet to join in the session and just kindly let them know that the class has officially started. So moving on, just to introduce myself, I am Dennis Williams and I will be your moderator for today's class. Right. So in the session today, we'll be taking a little announcements. All right. So in the first announcement, Gypsy Academy is hosting or is giving the opportunity for those who are looking for creatives, entertainers, athletes, innovators, and startups that are looking for free legal guidance to take advantage of a free legal clinic that we are opening to the public, right? And we are doing this all for free. And what this free legal clinic offers is a 20 minutes consultation with our professionals. So we have a list of professionals of legal people in the legal space, right, who are willing to offer their services for free, right, to give advice and counsel, and also to review contracts of people in those areas I had currently listed out. So please, if you know someone, right, who will be interested in this opportunity, or if you yourself are interested in this opportunity, you can kindly reach out to me, right? The registration link is on that or is on the flyer, but you can also reach out to me and I'll do well to direct you accordingly. All right, so moving on, I would like to introduce our mentors for today. Our first mentor for today is Miss Blaine Diolindo. Um, Yes, so we've had Miss Blaine in one of our previous classes, and it was a wonderful time with her in the first week. She was here for our legal development of FinTech, and we're happy to have you here again, Ma. I can see you're already on call. You are welcome. You are very, very much welcome. We are happy to have you again in session. Thank you so much, Ma, for joining in. Our second mentor that we are expecting for today is Mr. George Onyewuchi. I'm not sure Mr. George would be able to join us, but hopefully we'll get to hear from him if that will be possible from his end. So Mr. George is another mentor we have on this fintech space. I believe for the past few weeks he has been very occupied. That's the reason why he has been unable to join us the previous in the previous classes. But hopefully we will have him in today's session. Uh, Last but not least, is Mr. Raphael Okeke. Mr. Raphael, this is Mr. Raphael's first class for this quarter, and we are just happy to have him in class. So I'll just be going straight to read his profile, and then we'll move on with the session. So Mr. Raphael Okeke, experienced legal professional with a demonstrated history of success in corporate transaction and contracts management within the telecommunication, technology, aviation, enterprise business, and real estate sectors. With over 13 years of progressive experience. Okay. With over 13 years of progressive experience, he has a proven track record of delivering results in complex legal environments as a legal advisor at MTN Nigeria Communication PLC, He has been instrumental in managing diverse contracts and commercial transactions, including providing legal advice and support as an in-house counsel. Prior to his current role, he served as a legal manager at Dana Group of Companies PLC, where he managed the company's contractual agreements and provided technical legal leadership in developing legal and compliance frameworks. He holds an LLM degree with specialization in labor and industrial relation law, private law, and planning law from the University of Lagos. Additionally, he has obtained certifications in compliance, privacy law, and data protection to stay abreast of industry trends and regulatory requirements. So those are the mentors we'll be having in today's session. I can see Mr. George saying that he's here with us. We are very, very, very happy to have you today in class, sir. And we look forward to hearing from you. All right. So not to waste any further time, I would want to just open the floor to the mentors for their presentation as regards to this topic. I'm sure so far the mentees have been learning quite a lot from our mentors, right, that we've had over the last couple of weeks. And in today's class, our mentors will be talking about fintech contracts and transactions. So I think we'll be starting up with Mr. Raphael, saying that this is his first time in class. We'll just be giving the opportunity for him to get the class going, right, for like the next 15 to 20 minutes, and then we'll move on to our other mentors. You're welcome, Mr. Raphael.
Thank you very much. Good afternoon, everyone. My name is Raphael, like I've already been introduced. So to save time, we'll just jump straight to the presentation. Let me just share my screen. Please confirm you can see the presentation on screen now.
Not yet. It has not yet come up. Hello, sir. Your screen is not yet up.
Yeah, I'm trying to still share. Is it up now?
All right. Yes, sir. It's up now.
Okay. Apologies for that. So, good afternoon, everyone. Like has been said already, this is my first presentation at the JIIPCC. I hope the discussion, because I call this a discussion rather than a session, is going to be enlightening for everyone. Now, the idea was to discuss fintech contracts, but I felt while I was preparing these slides that it'd be important that we have a holistic overview of contracts, contract drafting, and skills for modern lawyers in contract drafting. Now, there is going to be a specific concentration on fintech contracts down the line, but we'll just jump in and we'll see how the flow goes. Please, you can interrupt me at any time to ask questions. In fact, I think I'll prefer that so that I can quickly address those questions as they come in. Just raise your hands and then someone can call my attention to if you have a question. Thank you. So let's start. Contract drafting is a fundamental skill for lawyers. Contract governs relationships, transactions, obligations, and effective drafting. The intent of contract drafting, the contracts basically, is to prevent legal disputes, protect the rights of the parties involved, whether it's 2 parties, 3 parties, or 4 parties. It will serve as a blueprint for the agreement between the parties is something they will rely on to understand their obligations, their rights, and their responsibilities, and where their liabilities or possible risks and liabilities could arise from. So the role of contracts in legal practice: contract governs the various aspects of business and personal dealings. They serve as legally binding agreements that align rights and obligations and expectations. Now, what is a contract? A contract is, I like to keep my definitions very simple, but contracts can be finding a fully developed definition of contract can be very complicated. So it's better we just put, I like to keep it simple. The contract is a legally enforceable agreement between two or more parties. What are the key elements of a contract? You need an offer. For those of you who have gone through contract law in our university days, this will not be new to you. You need an offer, you need an acceptance, consideration. There has to be legal intent, and the parties involved have to have capacity, or somebody will have capacity on behalf of another party. There has to be consent to the content of that agreement. And so making a contract written, what is the importance of making a contract written? Because you can have unwritten contracts, but you will see that in business, and specifically in FinTech transaction, contracts have to be written. And the importance of making a contract written is that it creates a precise and clear language that ensures that parties understand their rights, obligations, and it reduces the likelihood of disputes. Different industries require various types of contracts, such as employment contracts, sales and purchase agreements, lease agreements, service contracts, non-disclosure agreements, licensing agreements, piracy, blah, blah, blah. So I think the key skill in negotiating and drafting contracts would be that you must be ready to tailor the contract to the specific needs of the service involved or the specific need of the parties involved. Sometimes a contract can be both a service agreement and a sales and purchase agreement. It can be both an employment agreement and a licensing agreement. It can be both a licensing agreement and a lease agreement. So you tailor to the parties' needs and to the subject matter, or subject matters, because contracts can have way more than one subject matter. Subject matter or the subject matters of the agreement. So what are the pre-drafting considerations? Look at the initial client meeting, where you will discuss objectives, expectations, and concerns with the client, identifying client needs and objectives, understand the client's goals, and tailor the contract to meet the specific requirements. It's in this initial client meeting where you would be able to have your initial risk assessment, identify potential risks and liabilities associated with the contract. Then you research applicable laws and regulations, which will help the considerations in preparing the agreement, or help the considerations in the long term. So, structuring of the contract. Now, this is drafting tips, right? When you're structuring the contract, there has to be an introductory and definition aspect. There has to be the main body, the rights and obligation of conditions, boilerplate provisions, appendices, and schedules. So what are boilerplate conditions? So basically, the intent of this structuring is that you are going to provide an overview of how the parties involved and the key items used throughout the contract. So it will clearly align the rights and obligations of each party and the conditions that must be met. So for boilerplates, you include standard clauses addressing termination, dispute resolution, governing law, force majeure, liquidated damages, indemnities, representation. So drafting tips for clarity: use plain language, avoid ambiguity, define technical terms. You keep your sentences short and clear. Some some people fall into the pitfall of trying to make a contract dramatic, trying to use language that could cause confusion. Trust me, in the long run, you would have, and in my own experience with contracts now over 10 years, it's better to keep your sentences as clear as possible. It prevents ambiguity, it prevents disputes, and you cannot anticipate that because you are making you are drafting a particular clause as complicated as possible. You cannot fully anticipate that that complication you are adding will fully be to the benefit of your client or to the benefit of the person, of the party that you represent. Drafting tips for precision. Like I was saying about ambiguity, I had to specifically add a slide again on how to avoid ambiguity. Be specific, avoid vagueness, define roles and responsibilities. Roles and responsibilities clearly, anticipate potential issues and address them. Negotiation skills for contracting. So these are just a few factors to consider when there's few skills you should build up for negotiating contracts. Effective communication, active listening. This means listening attentively to other parties' concerns and objectives, and this will help you identify areas of compromise. Creative problem solving. Approach negotiation with a solution-oriented mindset. Don't always approach with, I have to get what my client wants. Sometimes the best outcome is the middle ground. And so if you always enter a negotiation hoping that, okay, always be aware of your deal breakers, right? And being aware of your deal breakers will help you not only build a rapport, which is the second point in this slide, not only build a rapport with the other party because you're going to make compromise on those factors that are not deal breakers for you. This really is a solution-oriented mindset when you are concentrating on what is the best possible approach to all the outstanding issues. Understand the power dynamics in the negotiations. This is important, right? If you are representing a vendor in a service agreement, the buyer of the service will definitely have the upper hand because the buyer of the service has the stronger motivation to walk away. Their money is still in their pocket. They have not paid your client for anything. So they have a bigger motivation to walk away. So be aware of this power dynamics, leverage it during negotiations, either if you are working for the buyer of the service or you are working on behalf, you are representing the vendor. Be aware of this power dynamics and be flexible of how you adapt to these dynamics. Flexibility and adaptability, documentation or follow. Always document what has been agreed upon, what has been settled accurately, and follow up promptly to ensure timely implementation. Common pitfalls to avoid. I've already mentioned ambiguity, inconsistency in documents. It's important that when you are drafting the document, you don't have clashing clauses. You don't have a clause that presents a different provision that clashes with the provision in another aspect of the clause. Failing to address key issues can lead to disputes and legal challenges. Review and revision. Review the contract carefully to ensure accuracy and consistency. Always obtain feedback from colleagues or mentors to identify areas of improvement. This also seek research previous contracts within the same that cover the same subject matter. revise the contract iteratively based on the feedback and further review, present the final draft to the client for review. All right, so now we are jumping into FinTech contracts because I have given like an overview of modern skills or modern considerations for contracts in general. Now we're going to specifically bring down those skills, bring down those considerations into the FinTech aspect. Now, FinTech agreements, like I said, I try to keep my definitions very simple. FinTech agreements, these are agreements involving financial technology, services, including payment processing, blockchain solution, digital lending, and other financial innovations. There was a time maybe 10, 15 years ago when FinTech contracts were mainly just payment processing. Now, they keep evolving. So that's why it's important that lawyers keep abreast with the industry changes and innovations. Not just lawyers, anyone that's dealing in FinTech transactions. Important they keep understanding what could be connected to FinTech. Now, even insurance sales is referred to as FinTech. So digital lending now is into FinTech. So that means it's not just banks that are involved. Lending houses, you can buy shares now via FinTech. So it's a ever evolving market. So what are the contractual elements to consider for FinTech? Specific contractual elements that you must take double look at when you are dealing with FinTech contracts. These insights are mine, and this list is mine, and so it's based on my own experience. There could be more. You could know more than me, so do not limit yourself to what I have written in here. This is just personal insight. So the payment terms and structure of the payment terms. A lot of times, these FinTech contracts can be commission based. They can be revenue share. That means maybe whatever revenue is coming from that FinTech service to a third-party customer, which in many cases is us, the users. The revenue will probably be shared among all the parties involved in the FinTech transactions. So that's why sometimes FinTech transactions can be multi-party, it can be 4 parties, it can be 5 parties, they can be the platform provider, they can be the customer holder, that's the person that's bringing in the customer or bringing in the subscriber. They can be a bank involved, they can be even be a telecom service involved. When we're talking about USSD services, telecoms have to be involved. Bulk SMS services, but SMS-based transactions, telecoms have to be involved as well. So these are the considerations you look at when drafting the payment terms and structure of the payment terms, and look at IP rights. A lot of times, a lot of parties involved have IP licenses, intellectual property involved. Data security is very important. In fact, the parties will bring this up, even if the lawyer doesn't remember, because this is not your expertise as a lawyer. The parties will always bring this into consideration from a technical standpoint. There's going to be integration between multiple parties. How is data going to be transferred? How is data going to be secured? What are the protocols going to be involved? So if there's a data breach, what protocols are in place? A lot of FinTech contracts have to contain this. Technology integration is also connected to the data security I mentioned. Clear description of responsibility and the customer journey. Now, this customer journey is very important when you're dealing with customer data a lot. When you're dealing with subscribers coming from telecom providers like MTN and Airtel and the rest. So when this is involved and when there are a lot of parties involved in the FinTech structure, the customer journey is important that is delineated in the contract, where how the customer is accessing the FinTech service, from what point, which platform is he connecting to, which platform is he landing on. This helps determine the different responsibilities of all the parties involved in the FinTech structure, based on who is responsible to the customer at each different landing. And you look at the dispute resolution, very important as well. The specific tips, like I said, fintech contracts require consideration of regulatory compliance, data security, IP, and industry dynamics and risk management. Addressing these specific considerations ensures legality and effectiveness in fintech transactions. So familiarize yourself with the industry dynamics, ensure you incorporate data protection, clearly define ownership of IP rights, account for regulatory changes that could be in play now and in the future. Ensuring security, I already mentioned this, but I think it's important data security is very important in fintech transaction. It's a technology contract, even though it's financial based, and a lot of times it's customer facing. Security measures, it's important they are mentioned and provided and delineated into the contract to ensure whose responsibilities starts where and stops when, because of the different integrations between the parties involved. Comply with anti-money laundering provisions, law, and know your customer regulations. Ensure compatibility and interoperability between the different systems and technology. This is not fully your responsibility, but it's important you drive your clients or the parties involved to delineate this into the contract. Considerations of fintech contracts in Nigeria: regulatory framework, licensing and registration, data localization and protection, cross-border transaction, legal jurisdiction, and dispute resolution. Yeah, this is just more of a deeper take into previous things I've mentioned on this slide. So regulatory framework is important. You need to remember that different types of fintech could fall under different types of regulators like NIDA, like FCCPC, even CAC can come in, even FIRS, NDPC, and NOTAP. SEC regulates mainly capital markets. And so where you have an application that maybe could be selling shares, a fintech application, a fintech platform that allows customers to access their share status or to purchase shares or sell shares. That's where SEC could come in. So NDPC, I think it's the NDPC, I wrote the NDPR, I think it's the NDPC now, would cover data protection, and you need to be aligned with Nigerian Data Protection Act. You will need to align with cross-border transactions. So if you have cross-border transactions that require international data transfer requirements, let's say from the GDP, you need to be GDPR compliant and other data requirements if these transactions go to other jurisdictions. Very important that you keep abreast with legal developments in the fintech space. Like I said, it's an ever-evolving industry, and important we keep ourselves abreast. All right, thank you. I hope I've been able to. We're on 21 minutes now. I had to skim through a lot because of the time allocation, but I think we can take 10 minutes if I'm allowed to listen to any questions anyone may have.
All right. Because of Mr. Raphael's peculiar request, so please, do we have any questions for Mr. Raphael? Mr. Raphael, in the last few minutes, I've started off with the basics around fintech contracts, and then with contracts themselves, defining terms, and moving on to fintech contracts. So is there any particular question for Mr. Raphael that anyone would like to ask while we go to the next mentor? Does anyone have any question for Mr. Raphael so far? Please, I would like to kindly request from the side of the mentees, let's try to make this session as interactive as possible. Please, I would like you to, at every point where after a mentor is done, please, you can kindly react. You use your emojis. I want to see activities happening within the chat box. So thank you, Blessed. Please, we will need to have more of that All right. So please, do we have questions for our mentors?
Yes, I have a question, sir.
Yes. All right. Please, you can go ahead to ask for Mr. Raphael.
I have a question, sir.
Yes, go ahead and ask.
All right, go ahead.
Good afternoon, Mr. Raphael. Thank you very much for this insightful section. So, sir, my question is, now that FinTech is evolving and sometimes we may need to regulate cross-border transaction, so how do we settle disputes in case it arises, since it will evolve like two or more countries?
Okay, thank you. That's a very important question. The thing is that there are many ramifications to how one would address that question. It really depends on the specifics, right? If a fintech transaction involves a lot of cross-border data transfer, that would mean maybe one or two parties involved in the fintech structure is a foreign company or a foreign-based company. And so if the data transfer is connected to Europe in any way, there are already GDPR regulations on how this data transfer is going to be handled. There are measures that have to be in place in the contract or in place as agreed between the parties on how this data transfer will be handled and whose responsibility or who's the data controller with regards to their responsibility as a data controller under the GDPR or as a processor under the GDPR. Now, in many cases, for dispute resolution, I think it's cleaner to always keep your dispute resolution and your applicable law as neutral as possible. In my experience, I've always used English and Wales law for dispute resolution, and we tie it sometimes to arbitration. Now, that's an expensive route if you are a fully based, if you are representing the Nigerian company in that transaction. So try to push for Nigerian law, try to push for arbitration within Nigeria. That's for dispute resolution. But for the data transfer provisions in the agreement, be specific about whose responsibility is. They have this, the tech people have this way of highlighting like whose responsibility it is up to a certain last mile of the transaction, and whose responsibility carries from that point to the next point. And read up on the GDPR if it's a Euro-based cross-border transaction. The GDPR has very clear provisions on how cross-border transactions are to be handled, whose responsibility is what, how consent is to be gotten, and where consent of the data owners is required. Does that answer your question?
Yes, sir. Thank you very much, sir.
All right.
All right. Thank you so much, Mr. Raphael, and thank you to the mentee that asked the question. So please, I would like to kindly request for the mentees, please, you can kindly rename yourself so that we know who is asking questions, because I think that last person was named Tim. So please kindly rename yourself so that we can know who is speaking. So moving forward, I would just like for us to hear from Mr. George. Based off of the topic for today, we just want to quickly hear from you in 15 to 20 minutes of your thoughts for today's topic, and then we'll go on to Ms. Blaine.
Yeah, good afternoon. I hope I'm audible. You can hear me.
Yes, sir, we can hear you, sir.
All right, good afternoon, everybody, and good to be here. Very, very apt contribution from the mentor that just spoke. Right. Very, very apt contribution from the mentor that just spoke. So I'm going to not repeat or go over some of the things he had already mentioned. Those things are very germane. Those are things that you need to really look at, right, when you are when you are looking at putting or working out a contract. Um, fintech contract, all right, whether at contract level, as in like at the fintech level or transaction contract level, are things I pretty much deal with every day. And I can tell you that, right, you would come across a ton of very different experiences that, you know, when you're trying to work out contracts, right? And there are some of those things that I will just particularly mention or try to throw a little bit light on, other than the typical standard things that have just been mentioned. On the transaction side, just to quickly say, I mean, it has been well covered. Most of the things you see in your T and C terms and condition when you want to carry out a transaction with as a customer of a fintech company, and then you have to now deal with dispute resolution, settlement, and all those and all those things. Somebody asked a question around cross-border issue resolution, which is a very germane question. As the fintech, right? If you are involved in anything cross-border, I had a fintech I used to advise, right? That had that kind of situation. Now, anything that happens between you and your cross-border partners, right, is little of no concern with your local customers that are engaging your service. So this fintech, for example, deals with cross-border transfers, right? Um, the entire digital wallet space for making cross-border transactions. Now, in a situation where there are service failures between the fintech and their cross-border partner, the local Nigerian guy using the service cares not about whatever issues or whatever service failure that international partner has had with the fintech. So they're going to hold them responsible, liable for whatever occurs with their transaction or whatever issues occur with their transaction, right? So when you are getting into contracts with services that have cross-border foreign partners, right? Whatever transaction, whatever contracts that you're putting in place for your local users, right? You might want to be very careful in spelling out some of your potential um, what do you call it now? Whether it's disclaimers, whether it's your potential liabilities, and make some things clear, even though you will still carry out or you still carry the liabilities that happen regardless of whatever you mentioned in your contract, right? You still carry those liabilities. And that brings me to the core part of the conversation around the contract itself, right? When you're entering contracts, what are some of these things that are not the typical things that we hear that you probably experience or have to deal with? There's something called the spirit of the deal, right? The spirit of the contract. You will see a lot of time where you have something in black and white, right? You have something documented, signed, and everybody executes. But you will still see parties in court. Somebody sues another party. Yes, I signed it. Yes, I'm liable for it. Yes, I owe you 1 million or I owe you 10 million. But then they sue you to court and say, this contract was in bad faith. This contract or these terms were not in good faith. So I'm challenging, even though yes, I signed it, but I'm challenging it. And you see sometimes that over that case will be drawn out over a long period. And in some cases, the court will award some favorable terms to the guy challenging the contract. That yes, this contract that was exploitative, for example. See a lot of times where you know party A, is trying to get so billion from party B, and the court rules that no, this is exploitative. Yes, he signed it, but it was not in good faith. So when you are entering that, preparing a contract or entering the contract, it is important that both yourself and the other party understand the spirit of the deal, right? The spirit of the contract, right? That whatever it is that we are doing, as much as we want to get the best of terms between ourselves, whatever it is I'm putting on the table as contract term should be in good faith, right? Should not come across exploitative. should not come across because I am a monopoly or because I'm positioned, I have to milk, the life out of you, and then just because you signed it, meaning that it is binding, right? It can still be, contested, tomorrow, regardless of whatever it is that has been signed. So the spirit of the deal is an important thing when you're even trying to think about, getting into some form of contract, and it has to happen across both parties. Both must come to the table with having the good faith, first and foremost, to work out that contract. Another thing I want to touch about is what we describe as win-win, right? The negotiation. Now you've come to the table in good faith, but you want to make sure that you're negotiating your contract with a view of a win-win, right? Not just about you, because once it's about you, right? Of course, the other party, would either, if they are forced to sign because they need that service pretty badly, it won't be in good faith, and they can over down the line, they can actually get to. They are just waiting for the next opportunity to leave that contract. They're just waiting for the next available partner that they can find to leave you. So they are just there at that time because maybe their choices are very limited. The smallest chance they get, and either a competitor that they finally, one of your competitors that they finally are able to do have something with, they just drop you. So you might end up even getting people to sign contracts like that don't present a win-win because you muscle them into the contract, but you really don't have partners. You really don't have customers, right? They are just people in waiting to exit the deal, right? So negotiation is important. You want to negotiate, be very firm about your how you negotiate your commercial terms and any other thing of interest that is not even just commercial, right? You want to present a win-win opportunity. Understanding what constitutes a win, or understanding what constitutes an interest of the other party, would help you better off, right? While you're also negotiating yours. Yeah. Sometimes you come to the table, the most important thing to you is probably not the most important things you're shouting about, right? You kind of create a false picture of interest, right? Of priority of interest. So for example, you're putting together a contract where there's a part for maybe a commercial term of X amount of money per unit of whatever you're dealing on with the guy, and then there's another one that talks about maybe how long you can owe the guy, or how long you can hold that money before you have to remit it. To you, maybe it might not be the amount, right? That's your problem. To you, it might be like, I want to be able to hold this money before I have to pay maybe a 60 days, or for 90 days, or for 120 days, and maybe the guy is telling you every 7 days he expects you to make payment at the 7th day, right? And then you go, you understand that, okay, but this guy is very particular about how much comes to his pocket. What is more interested for in that contract. So you can start by putting a lot of emphasis on the amount, right? And let less emphasis on what matters most to you, to present that false picture, that thing that, okay, it's all about the amount. If you see that that amount is what is very important to the guy, and then you get to now a point where you now concede significantly on the amount that looks important to him, and then trade it for him to concede on what is truly important to you, probably, which is the tenor of how long you hold the money before you have to pay. So, okay, you know what? I'll concede to this up until 50% since you really insisted. But in return, this tenor has to move to 30 days or to 60 days, right? And both partners at that point, he's feeling good because what is of more interest to him is getting a win, and you are feeling good because what is of more interest to you, you're also getting a win. So it's a tricky thing to play around with, trying to read and understand what are the things most important to your partner you're getting in contract with, or the fintech you're getting in contract with, and what is more important, most important to you. Another critical thing I also want to mention around fintech contract is the fact that you need to be very, very, and this is where legal guys come in. Um, you need to be very careful to review the terms before you execute. And there's no kind of thing I haven't seen, in this. So a lot of time we put a lot of energy on the commercial term side of things. And then immediately after the commercial, somebody just throws in those commercial in a very bulky document of maybe 50, 40, 30, 20 pages and throws at you, right? You just scroll to the commercial page and look, okay, okay, fine. And then go and sign without taking time to read out every line on that document. And you only find out some things, right, when over the course of the period something happened, right? I've had situations where partners that I'm dealing with, something that was signed in the deal that said that the company cannot exit the contract to another competitor, right? Except a certain X amount of time has elapsed, or a certain fee, right, to compensate, which was not even mentioned in exact, right? An agreed fee to compensate is fulfilled before they can move to a different place, just somewhere in that contract, right? And by the time I picked the contract up, or by the time it was time to, the guys were not delivering as they were supposed to deliver, and the organization wanted to move to another guy. Somebody gets a letter from a lawyer, right, to say, hey, guy, you can't. We got wind that the organization is now starting implementation with another partner. That is not the terms of the contract. You can't exit to another partner except you're paying us off. And here's the invoice for what we are charging as our payouts, representing our efforts on this over X amount of period. Like, where is this coming from? And go back to the contract, find out some fine prints, littered here and there, speaking to, that exit clause, right? It's not even put, it was not even put in a proper header, just put in some fine prints within the document, right? A case where, I've had negotiations with very big fintech companies. By the time they throw contract, in fact, this happened exactly yesterday, right? By the time the contract was thrown back to me, I'm seeing somewhere saying that in 6 months, if I'm not doing 400% growth, right, whatever terms agreed will revert back to um, quote unquote their standard pricing, which was not even particularly mentioned there, right? And I'm like, hey, where is this coming from? You get. So if somebody didn't, and because we're really in a hurry to close that thing, to implement that thing, probably would have just executed that deal just as early as yesterday. Like, please, this is not part of my conversation with you. And then they had to expunge that whole thing. Okay, yeah, it's because blah blah. Give all the excuse in the world. We'll expunge it and send back on Monday so that we can execute. So if you're not careful about reviewing every line of the document, you have a situation where somebody can throw in things in that place for you to, and then you just quickly sign off. So that review is the most um, is most critical, right? When you want to execute a contract. That another situation where, I mean, involved with some international partners, will find out that, look, the direction things are going with this exchange rate, this is not sustainable. We need to kill this thing. We need to use local guys now to do what we want to do, right? And in in doing that, month one, couple of months pass. Probably the guys are not getting what they want. They send the bill in US dollars, right? Significant amount of money. And like, hello, why are you sending me a bill? I'm not using this service anymore. Like, no, what that is not what was agreed, right? Read the whole line, and then a particular clause there is now something that is subject. It's an ambiguous clause, right? It's subject to interpretation. We interpreted it in a particular way, and they are trying to interpret it in another way. You get, as funny as that. So you have situations like that. So you have to make sure that that review is critically thorough, because every other part of that contract negotiation can be subject to whatever it is that you've just committed to without even particularly knowing. All right. So those are some of the things that it's very critical, for us, that when we are looking at contract outside the regular things, like I said, the previous mentioned, right? That you need to deal with the legality of it, the regulatory, situating it into a regulatory framework design, some other issues around data, how data is going to be exchanged, um, within the execution of that contract or whatever service is going to be provided, all that whole thing, right? Very important. But these are some unmentioned things that are not typically what they call soft issues, things that are silent, right, around contract negotiation or contract dealing, right, within the space, that you need to be extremely careful and watch out for, because the interesting thing when it comes to fintech contract is some of these things might look light, but they can easily translate to either meaning that you're having to have liability in tens of millions, depending on the scale of your business, right? Sometimes in hundreds of millions, depending how your business level scales, or maybe making you not be flexible in the market to be able to go and use other cheaper options that you might find down the way, right? Other competitors that you might find down the way, or limiting how you can model your product or your solution out there in the market. Some of all these things are things that would limit some of those things. So it's just to say, outside this whole standard things, there are these soft issues that you must also have in mind when you're thinking about contracts within that space, right? The right spirit to the deal, how you approach the win-win, how you look at the dependencies or variables that could affect your contract within the near future, right? Is it a political change? Is it maybe a structural change? Is it operational change? What are the likely ones at least you can foresee that can impact this thing? And does it have any input in maybe some clauses that you add to that contract if you have a room to? Then the other part is reviewing thoroughly before you execute to make sure that every line of those fine prints, right? Never assume that you are in the position to just understand it without some guidance, especially legally, right? And don't also make it just legal. So it's a combination of legal and product, or legal and business, right? The legal guy on the legal side will give you all the legal angle to it, right? Then if he's a legal person that understands tech, all right, we'll be able to flag some things that maybe additional comments or additional review will be done by the technical team or the commercial or the business team, just to make sure that everything is aligned to the understanding, very clear to the understanding of you. If there are abbreviations that you see that you don't understand, you should be very, be able to bring them out for it to be spelled out explicitly within the contract. So some of these soft issues that I wanted to focus on, because I know that, the other mentors will definitely call out the standard, typical things that we need to look at. But I just wanted to call our attention to some of these softer issues that typically are not as hardly documented, that you will encounter going through this. Thank you.
All right, thank you so much, Mr. George. We sincerely do appreciate that perspective and that angle that you brought in the topic for today. Thank you so much, sir. Please, more reactions from our mentees. We want to see you use your emojis and the chat box. Thank you, Dapo. Thank you, Divine. So not to say the least, but one of our very esteemed mentors, Miss Blaine. Thank you so much for joining in. We're happy to have you in class. We want to use you to wrap up the mentors presentation. So far, we've heard from two of our mentors, and we just want to give you the floor to help Nidu piece together this particular class from the angles of the from the angle of the mentors. So please, Ma, the floor is yours.
Thank you so much for the previous introduction too. And it's a pleasure to be here once again. I'm super grateful for the opportunity to share a glimpse of this amazing world of blockchain and smart contracts. I'll share my screen. Want to share with you my presentation. So just a second. Um, Can you see my screen?
Not yet, Ma.
No?
Not yet. It's not yet up.
Just let me try again. 1 second. Can you see it
We
now?
we can see your screen now. Thank you.
Okay. Okay. Thank you. So yes, let's go. So to those who aren't here on week one and you still don't know me, I'm Bliney. I'm a certified lawyer and I'm immersed in the UAE law since 2021. I'm here have video management for fintech companies, especially in Dubai. And today my mission is to share with you guys insights on fintech transactions and contracts, specifically focusing on the role of blockchain and smart contracts. I would love to go deeper in this amazing subject. That's something that I really like to talk about, but unfortunately, I don't have enough time today. So, in addition to what the other mentors have brilliantly shared, I'm going to highlight a few essential points about the blockchain and smart contracts with you today. So, and please, who want this presentation to be shared, just let me know, send me an email or the moderators to share too. Okay, so let's start.
Apologies, Blaine. The presentation doesn't seem to be showing properly. I don't know if it's just me.
I'm sharing now the objective screen.
Okay,
Isn't it?
your screen is blur. It seems to have a notice on it saying click to exit full screen.
Just let me double check what's happening.
All right, it's clear now.
Okay. Okay, so I will present like this. Okay. So yes, the objective of this presentation is to make a brief introduction to the topic that I already explained, but focusing on the impact of blockchain and smart contracts within the fintech sector. So, starting with this subject, I would like to quickly brief you about the blockchain in the fintech. And I believe you guys are already into the subject and you already know how's blockchain, how's the mechanism, and this kind of details. So I want to highlight here very quickly a few points about blockchain and how the blockchain enables faster, more secure, and cost-effective transactions. The blockchain technology nowadays is revolution, also, has shaped the landscape of digital transactions, offering significant advantages in speed, security, and cost efficiency. Regarding faster transactions, traditional financial system has often involved multiple intermediaries and creating a lending process. So the blockchain came to operate on a decentralized network and where the transactions are validated by a consensus mechanism and recorded on a shared ledger in a real time. So these reduce delays and accelerate the transactions processes and also allow almost instantaneous transfers, particularly if it's in benefit for cross-border transactions, where delays can be significantly of a matter or a concern. So also blockchain technology has enhanced security in these kind of transactions. The security is a cornerstone for blockchain technology, and each transaction is encrypted and linked to the previous one, forming a chain. And those chains are forming the blocks, and the blocks are immutable. And the cryptography approach and the distributed nature of the blockchain also make it highly resistant and also avoid frauds and some leakage and this kind. And additionally, the decentralized network means that there is no single point of failure, and that's also protect the blockchain and the transactions against cyber attacks. And the last point here in this subject, in this slide, is about the cost effectiveness. The blockchain came to reduce the costs and eliminate the need for intermediaries. I don't know if you guys are already aware for example, international transactions between banks, and sometimes you need to use an intermediary to make the transaction happen. So the blockchain came to eliminate these intermediaries, and it made the payments and a lot of big and huge transactions even easier and costless, of course. Additionally, the automation of the transactions through smart contracts minimized this kind of operational expenses, administrative expenses too, by streamlining process and reducing transaction fees. Also, the blockchains presents a more economical solution compared to the traditional method. And in summary, the blockchain technologies has the ability to facilitate quicker transactions, also to boost the security, cut costs, and it's nowadays representing transformative advancements, sorry, in the financial sector and beyond. Nowadays, we have seen blockchains everywhere, and it's also becoming even bigger when we talk about the subject. And as I'm into blockchain and fintechs, and I'm sitting the hub of the digital assets, everything that we can expect for the future of blockchains and its implementation, and also how it can reach even more different markets. It's amazing. And this technology continues to evolve. It's impacting in various industries. It's, as I mentioned, is expanding in a way that there is no way back, let's say. So yes, and it's a very open ocean for innovation, a lot of opportunities to build different blockchains um, to also maybe implement in different markets and so on. So moving further, I want to quickly introduce you to smart contracts. Just in addition to what the previous mentors said, I like to explain a little bit more about the smart contracts, the essence of the smart contracts, the definition, and so on. Because sometimes we hear about, we are listening about, but we don't know very deep what is that? How's it? How can I apply in different markets too? So as a quickly definition, I'm used to say that smart contracts represent a powerful innovation in the world of the digital transaction. Everything nowadays is digital. We very it's very rare nowadays we see traditional and on paper transactions, let's say. Well, no one is still going to the bank with a full amount of cash, and the bank is transferring this cash via, let's say, via security cards to another bank. It's in the past. Nowadays, everything is digital. And those smart contracts are self-executing contracts with the terms of the agreement directly written into codes, allowing the secure and transparent and automated execution of contractual obligations. And the main functionality of smart contracts lies on the ability to eliminate the need for intermediaries once again, as the blockchain, and reducing transaction costs and speeding up processes. Um, the automated nature of the smart contracts ensures that the actions are taken only when predetermined conditions are met, increasing the reliability and the trust between the parties. So we have conditions here um, to that allows the self-execution of the contract. For example, um, smart contracts in commodities transactions. I can I can request the codification to only allow the final payment once I have the certificate that the goods are landed and they follow all the specifications and so on. So I have to meet a few conditions. And since the smart contracts operating on the blockchain technology world environment, they offer immutability and security, meaning that once they are deployed, the terms cannot be altered or tampered with. And these these kind of things make the smart contracts particularly useful in sectors like finance, real estate, supply chain management, and different markets where trust, accuracy, and efficiency are a paramount. And for me, it's essential to note that while smart contracts offer significant advantages, they also come with a few limitations, such as the need for precise coding and the challenging of handling complex legal scenarios and trying to put together different jurisdictions, different approaches, and so on. And it's crucial to balance this innovation with cautious and well-informed implementation. Are you guys with me?
Yes, ma'am.
Okay. So yeah, let's move on. As I mentioned, I would like to share a lot with you, so that's why I'm running to share as maximum as possible. Okay, but if I'm going uh too fast, just let me know. I will reduce my speed. Okay.
That's fine, ma. That's fine, ma.
Okay. So talking about the application of smart contracts in the financial services specifically. Um, The smart contracts are empowering the financial services industry by automating and securing a wide range of financial transactions. The ability of the smart contracts to execute autonomously and without the need the intermediaries such as banks, brokers, or agencies can reduce cost and speed up the processes and also minimize the human error. So in areas such as, let's say, loan agreements, insurance claims, securities trading, smart contracts streamline the operations by automatically enforcing the terms of an agreement once the predefined conditions are met. So uh, let me try to exemplify. For example, in securities trading, smart contracts can facilitate faster settlements by automating the transfer of the ownership once the payment is confirmed. It's similar the previous example I shared with you about the commodities trading too. And this mechanism reduce the typically delay that we could see in traditional systems. So in lending, the smart contracts can automate the process of disbursing loans and collecting repayments, ensuring transparency and reducing the risk of default. Also, we can use within the insurance for insurance claims, for example, and smart contracts can automate payouts based on specific trigger events such as flight delays or natural disasters, and it can provide more efficient services for clients. So yeah, once again, I want to emphasize that um, there are many benefits of using smart contracts, and it's so clear as, for example, efficiency, transparency, cost effectiveness, reliability, and so on. But it's crucial for us to ensure the robustness, codification, and also to consider legal, regulatory, and security challenge too. And given the complexity of this, the financial transactions and the financial world, financial services, through testing and careful legal drafting are essential to avoid potential loopholes and also vulnerabilities in the system. Okay, that's it about the smart contracts in the financial services. Now I'll talk about a little bit of the legal considerations for smart contracts and the legal challenges and framework. So, yeah, what are the challenges we can face? I already highlighted a few of them, but the enforceability, I believe someone asked about the execution or the disputes, right? So it's a big challenge that we are facing when we deal with smart contracts. So the legal recognition of smart contracts and their alignment with the existing laws, and also each legal system governs a smart contract on a decentralized platform. We are here talking about the jurisdiction and the big debate about the code as the law. So these are still, let's say, cloud subjects and cloud matters, cloud challenges we are facing nowadays. So it's important to recognize that while smart contracts offer efficiency and automation, they have legal challenges. And one of the key issues is the enforceability. I believe this is the biggest one because we don't have um, a clear legal framework specifying in each country how it can work. So we don't know each jurisdiction may not recognize the code as a legally bind agreement, and jurisdictions vary on their treatment of smart contracts, and aligning them with the traditional legal principles such as offer acceptance, consideration, and these principles can be very complex. So another challenge is about the immutability of the blockchain, which while providing security, it can make difficult to amend or to terminate this kind of contracts, the automated contract, in case of, for example, error or dispute or sorry, give me a claims, disputes, or determination of the contract can be challenging. Are you listening to me?
Yes, ma, we are listening.
Okay,
Yes,
just
ma, we
because
are.
my headphone fell down. Okay, and in addition to the challenges I highlighted here, the centralized nature of the smart contracts raise questions of jurisdictions and applicable law, especially when the transactions span multiple countries. Liability concerns also arise. If a smart contract fails or is hacked, who bears the responsibility? We don't know. So to mitigate these risks, it's essential to develop a clear legal framework and regulations to address these issues, and while ensuring that smart contracts align with the existing contract laws. So we nowadays we are trying to balance the automation and the self-execution with what is already in place um, uh, on the law side. I mean, what the regulations already implemented. So it's quite challenging, and it's something that, as a legal expert, and for you guys as freshers in the market, it's something to think about. Maybe bring some ideas and how we can manage it better. So quickly, how many minutes I still have?
Ma, you have about, I think, roughly about 5 minutes, ma.
5 minutes. Okay, so I will skip security and risk management, okay, because it's part of the automation. I will go very quickly through the regulatory landscape because it's crucial for us to understand what is the regulatory landscape for smart contracts and as it's evolving rapidly. The globally, the jurisdictions are beginning to address how smart contracts fit into their existing legal frameworks. For as of now, we have the US and the European Union. They have started recognizing the enforceability of smart contracts with legislation that aims to integrate them to the traditional contract law. And but still, these challenges remain around defining liability, dispute resolution, and the legality of code-based agreement. Specifically in the UAE, that is a market that I'm handling, that I'm into, that I know better. The UAE, significant strides have been made here, particularly in Dubai, because Dubai has pushed to become the blockchain hub under its uh, Dubai blockchain strategy. The government have a lot of incentives, and they are really into developing this sector. The both sectors, I mean, blockchain and also digital asset sector. And the UAE's regulatory bodies, such as the JIIPCC, that is Dubai International Financial Center, and ADGM, the Abu Dhabi Global Market, are both free zones, independent with their own laws, their own regulations. They are actively fostering blockchain innovation and developing legal frameworks for smart contracts specifically. And but um, as with other jurisdictions, they are still facing challenges and ensuring that these contracts comply with data protection, financial and consumer protection laws, and it's remain the priority here to align and see all these subjects and make it happen. So emerging regulations will likely focus on addressing these gaps and aligning smart contracts with existing legal and regulatory standards. Okay, so this is the smart contract cycle. Before going into the smart contract cycle, I want to highlight how's it in Nigeria, because you guys are in Nigeria, right? So sorry?
No, continue. You can go ahead, ma.
Okay. So the Nigerian legal system has yet to make a statement on smart contracts, but the world is gradually adapting to the digital era, and at the pace that is still not match the rapid advancements in blockchain technology. Thus, establishing legal recognition of smart contracts may require legislative updates to bridge the gap between traditional contract law and the innovative nature of self-executing agreements, as other jurisdictions do. It's not something only about Nigeria. It's about the world. It's a worldwide map, and the Nigeria laws already recognize the sanctity of contracts, but the absence of specific legislation addressing smart contracts pose challenges. And the courts there are yet to establish precedents and making it vital for parties entering into smart contracts to ensure clarity and specificity in their terms. Okay, so quickly going to smart contract cycle. It's something challenging because we have to put completely different sectors to work together. I don't know if you guys already had the opportunity um, to draft a split for a smart contract, but it's super interesting because as from the legal side, we have also to think how the blockchain, how the automation, and how the develop side, the technology can make what you are thinking happen. How they can implement the execution of all terms of the agreement happen within the blockchain system. So here I have this the cycle, and everything starts with the legal first, and then the engineer, the soft engineer, the blockchain specialist, the blockchain developer will codificate the legal terms and create the smart contract. And then we'll follow the cycle. So I still had some stuff to share with you, but my time's gone. And I'm so grateful for the opportunity to share with you guys a little bit about the the fintech, blockchains, and smart contract subject. If you have any questions, or if you want me to share this presentation, please feel free to reach out to me anytime by email or also via LinkedIn. And that's it. Thanks once again for the opportunity. I'm super happy to be a mentor here.
All right. So thank you so much, Ms. Blaine. We sincerely do appreciate that presentation. I don't know about you, you guys, the mentees, but our mentors have done so well in addressing a few issues as regarding the top subject matter of today. And if just to give like a summary, I would say Mr. Raphael generally talked about contracts and gave us a little detailed insight into what fintech contracts consist, some of the intricacies around it. And then basically Mr. George Onyewuchi just gave us a highlight of some things that you may not necessarily find are situated in a contract, but there are issues that may come up, how to negotiate your way around some disputes that may happen in contracts, agreements, and negotiation. And Ms. Blaine took us through a route addressing the issues of smart contracts and blockchain, and how the immutability around smart contracts, some of the challenges, and the regulatory framework around that. And I hope our mentees are taking kind notes to that. For everything that you miss, this class is being live streamed, so you can always revisit it to just update yourself on some of the things that our mentor, some very important points that our mentors have highlighted on that you may have missed during the session. So we've heard from our mentors. Now we want to hear from our mentees, right? You've done your research, you put in the work to get to carry out the based off of the topic we sent to you to do research on. Now we want to hear from you. We want to give you 7 minutes each, that's both groups, for your presentation. So please, can we have the group presenters for group, or the group presenter for group 1? We would like to hear from you, your presentation on the topic for today. Who is the group presenter for group 1? Please, you can kindly share your slides, share your screen, and carry on with the presentation. All right, Mr. Banigo. Okay, oh, sorry about that. Good day, we can hear you.
Okay, so I am Banigo Royal and I'm the presenter for group 1.
All right, thank you, Banigo. Please go ahead.
And transactions. So I'll be starting off with this rhetorical question. Have we ever considered a straightforward method of completing transactions that is void of intermediaries such as banks? Yeah, the answer is definitely yeah. Lies in the innovative world.
Sorry, Roya, can you hear us?
So as we navigate the complexities of modern financial transactions, it becomes increasingly clear that Sorry, I can hear you.
Yes, your network seems to be cracking. So please, can you
Hello.
yeah, we can hear you now.
Okay, sorry about that. So, as I was saying, as we navigate the complexities of modern financial, sorry, can you hear me?
Yes, we can hear you.
As we navigate the complexities of modern financial transactions, it becomes clear that traditional methods are no longer sufficient. Thus, that's why we have today the blockchain and smart contracts revolutionizing the fintech and the fintech industry, the fintech landscape and the likes. So basically, let's think of blockchain as a digital ledger that stores information securely. We can also liken it to, let's say, a digital notebook where you write down information or data. However, this notebook, like I mentioned, is super secure because it's shared with lots of people. So basically, anytime a new data is added, it creates a block that is linked to the previous one, thereby forming a chain. That's why we have the name blockchain. So each block contains some data, and once it's added to the chain, it cannot be altered or deleted. It's immutable, thereby creating a permanent, unchangeable record that multiple people can trust and agree on. Moving on, we have smart contracts on the other hand. So basically, smart contracts are digital agreements that automatically do what they are supposed to do once certain conditions are met. Is basically like setting up a rule that says if this happens, then do that. For example, if you pay for a concert ticket now using a smart contract, once the payment is made, the ticket is automatically yours without needing a ticket seller or an intermediary in between. So basically, smart contracts are self-executing contracts with terms of agreement between the buyer and the seller. Moving on, the relationship between the both is basically these smart contracts are stored on a blockchain. So the blockchain provides a secure and transparent environment for smart contracts to run. So basically, when you combine blockchain and smart contracts, you get a super secure and automated way to handle transactions and agreements in fintech. Together, both of them make transactions faster, cheaper, and more secure in the fintech industry. Sorry, can you hear me?
Yes, we can still hear you.
Okay, so going further, we'll be looking at the benefits and challenges of blockchain to fintech. For the benefits, the first one is fast, secure, and low-cost transactions. So basically, by leveraging blockchain and smart contracts, we find out that transactions occur swiftly due to the elimination of intermediaries such as the banks. That is, there is no need for middlemen like banks to verify anything such as data. And this ensures direct exchanges between the parties involved. Another point is increased accuracy and transparency. Since all the transactions recorded on the blockchain are executed automatically rather by smart contract, there's less room for errors and misunderstandings. Seeing everything is transparent and visible to all parties involved, thereby ensuring accuracy and trust in the transaction process. Other benefits include improved customer experience, enhanced security and reduced operational risks and the likes. So moving on, we have the challenges, and the first one is scalability and performance. So basically, scalability in simple terms means having to handle a lot of transactions. So the challenge arises when we have the network or a lot of transactions on the network and it becomes congested due to, let's say, maybe a high volume of transactions or a high number of transactions, leading to a slower processing time. We also have regulatory uncertainty and compliance, which is as a result of, let's say, lack of clear guidelines and regulations surrounding the blockchain technology and cryptocurrencies. Yeah, so there are many others listed down. We can go through it. Moving on, we have the potential application of blockchain to fintech transactions. The first one is cross-border payments and remittances. So yeah, it's common knowledge that blockchain makes it easier to send money across borders faster and cheaper. Imagine having to send money to a friend in another country without having to incur any high cost or having to wait for a long period of time. And an example of a platform like this is Stellar. The Stellar platform enables individuals or businesses to, send money internationally and quickly at a lower cost in comparison to the traditional banking systems. The second point is digital identity verification and authentication. Yeah, with blockchain, verifying your identity online can become more secure and reliable. It's just like having a digital ID that is trustworthy and can be used for various online transactions. We also have secure and transparent data storage. Yeah, so generally, blockchain offers a secure way to store data. And you can liken this to let's say, a digital safe that keeps your information safe from unauthorized access. We have others such as decentralized finance and lending, supply chain finance and trade finance. We have cryptocurrency access exchange. So now we'll be considering the evolving regulatory landscape. So involve rules and guidelines set by governments to ensure fintech companies operate within set and specific standards when handling financial transactions and contracts. So like we mentioned here, they include payment services directives, which consist of rules that make online payments safer, faster, and more secure. We have general data protection regulation, which is basically a law that ensures fintech companies handle personal information carefully and securely. We also have anti-money laundering directive, which is aimed at ensuring fintech companies verify customer identities, monitor transactions, and prevent financial crimes in the fintech industry. Yeah. Sorry, so yeah, we have Bank Secrecy Acts, we have Financial Institutions Regulatory Acts, we have the International Organization of Securities Commission. So now we'll be considering how different jurisdictions adapt their regulatory framework to accommodate the growth of fintech in financial transactions. Basically, different jurisdictions adapt their regulatory frameworks through various approaches, which include the sandbox regimes like in UK and Singapore. And this has to do with testing new ideas and innovatives without following all the laid down rules. We also have licensing and authorization in countries like United States. So basically, fintech companies in these countries, for example, the United States, need official permission to operate. They basically have to, let's say, meet specific requirements set by the government to make sure they are safe and trustworthy. Moving on, we have guidance and guidelines in countries like Canada. We also have regulatory harmonization. Now, I'll be looking at the security and privacy concerns associated with fintech transactions. For the security concerns, the first one is data breaches, which basically has to do with unauthorized access to sensitive information. We have transaction risks, which can be seen in cases of, let's say, identity theft. We have cyber attacks, which includes things like hacking, or let's say,
Group presenter, we can't hear you, and please, we would like for you to, if it's possible, try to start rounding up the presentation.
Sorry for the break in transmission. So yeah, like I was saying, we have transaction risk, which has to do with cases of identity theft. We have cyber attacks and many others. Moving on, we also have the privacy concern, which includes data protection. And that's just basically making sure personal information, your data and all, isn't shared or sold without your permission. We also have confidentiality, which has to do with keeping important information like your financial details safe and secure. Yeah, and a plethora of others. So here we have methods for enhancing cybersecurity measure. The first one is encryption, which is simply putting your message, let's say, in a secret code, so you alone can gain access to it. We also have secure authentication that has to do with having not only a password, but also, let's say, an alternative way to prove that, yes, it's really you and you're the one trying to gain access to your data or information. Let's say maybe a fingerprint or a code sent to your phone. We have regular updates and patching and a plethora of others also. Lastly, We have the methods for protecting sensitive financial data, which include data encryption, two-factor authentication, we have tokenization, we have secure APIs, compliance with regulations, regular audits and monitoring, we have data minimization and user education. Thank you. That will be all. And the group also had questions. The first one is, how do fintech companies balance data analysis with protecting sensitive user information? The second one is, what measures can fintech companies take to respond to data breaches or cyber attacks?
All right, thank you very much, group presenter, for that wonderful presentation. Well done to you and your team members for putting it together. We appreciate your efforts and well done once again. So please, moving on, group 2, if your presenter is ready, we're ready for you. Kindly share your screen and then start your presentation. Ms. Royal, please, you can stop sharing your screen now. All right, so please, we have the presenter for group 2.
Yes, sir, we do. I'm here. Good evening, sir.
All right, good evening. Welcome. Thank you so much for muting. Please, you can kindly start your presentation. You have roughly, let's say, 7 to 10 minutes for your presentation.
Okay, sir. Thank you. Thank you to our mentors who have taken their time to teach us today on our topic, and also to our group up presenter. Thank you. Actually, someone will be helping me with the screen sharing because my laptop is having some issues right now. So, okay, she has done that. So our topic is financial transaction, scalability, and efficiency. And before we begin, I'll just like to talk about the meaning of scalability and efficiency. Scalability refers to how well a system or process can handle an increased workload or growth. In fintech, this means how well payment systems, transaction processes, or technology can manage a larger number of transactions without slowing down or breaking. It simply means how well something can grow or handle more work. For example, if a payment system can handle 10 transactions and then handle 1,000 transactions without slowing down, it is scalable. Efficiency is about how well something is done with the least amount of wasted time, effort, or resources. An efficient system minimizes delays, errors, and costs. It simply means getting things done with as little waste as possible. Delving into our slide now, we talked about strategies used by fintech companies in ensuring scalability and efficiency. And the first that we listed is cloud computing. Sorry, can the person sharing the slide make this a little bit bolder? I'm having difficulties reading this. Thank you. Thank you. Cloud services maintain a high level of security by managing the amount of financial data. Sorry, please, could you play this slide? I'll just explain. Okay, so fintech companies use cloud computing to store data and run applications over the internet instead of relying on physical servers. This helps them to scale up quickly, that is, to handle more users and transactions without buying expensive hardware. It also makes their services faster and more flexible. Automating research. Automation tools help fintech companies quickly gather and analyze data without human effort. Instead of employees doing manual research, software can pull data from multiple resources, process it, and present results. It speeds up decision making and reduces errors. Utilizing RegTech. Okay, so RegTech means regulatory technology. RegTech uses technology to help fintech companies comply with laws and regulations more easily. The next slide, please. Please, the next slide. Okay. Utilizing RegTech. Through RegTech companies, applications are created to enhance customer engagement. Okay, thank you. Customer experience and engagement. So fintech companies can acquire customers through strategies like understanding customer behavior, leveraging businesses, data analytics, and offering seamless onboarding. Resource maximization, clear-cut strategies aimed at the effective prioritizing, employing, and utilizing of fintech resources ensures scalability. This addresses human and infrastructural resources. This addresses human and infrastructural resource concerns in the most optimal manner. When budgeting and team management in response to business needs helps the business to reap good benefits, especially for fintech companies. Risk management is also part of these strategies, and a scalable infrastructure will mitigate risks encountered by expanding fintechs. Thus, data security measures like encryption, tokenization, role-based access, etc. are necessary. When these measures are put in place, obviously risks are mitigated, and this will help in scalability and this will help in efficiency as well. Mobile payment applications like Apple Pay and Google Pay also employ strong encryption techniques to ensure confidentiality of financial data. Please, the next slide. Contract automation tools. Okay, so what are contract automation tools? Contract automation tools are software solutions that streamline and automate the process of creating, managing, and executing contracts. They use technology to create and track contracts with minimal human input. It makes the whole process faster, reduces errors, and ensure that everything is well organized. Our first mentor, Mr. Raphael, talked about creating contracts. So that was a foundation to this. Contract automation requires minimal human efforts, and it also ensures that everything, the whole process is well organized. So what do organizations benefit from contract automation? Obviously, it helps in generating contracts. So these contract automation tools create a template and course libraries that help organizations to generate contracts. And the second one is negotiate terms. With collaborative editing and approval workflows, the tools help the organizations to in the process of generating the contract to negotiate terms with parties. Sign electronically. Using e-signatures and digital certificates helps to the contract automation tools help the organizations in signing electronically using e-signatures and digital certificates. Store and manage. The contract automation tools keeps all contracts in one place, so they are easy to access and organize, monitor and analyze. These tools also help to track the status of contracts and see how they are performing. For example, are deadlines being met or are times being followed and other things like that. So what are the examples of contracts automation?
Presenter, we can't really hear you anymore. Are you with us, or is it just me? Okay. Okay, are you back with us now, presenter?
Yes, I am. Sorry for that. My
Yeah. All right.
network
So,
was disturbing.
all right. Sorry about that. So, please, can you kindly try to wrap up the presentation as fast as possible?
Okay, sir, no problem. So these are the examples of contract automation tools. There are about 12 that we have listed here. These are the tools that helps in all the processes that we listed in our previous slide. Please, next slide. I believe the next slide talks about, okay, the features of contracts automation tools. So what are the features, what are the characteristics of these tools? We have template management, course libraries, electronic signatures, workflows and approvals, contract analytics, integration with CRM, ERP and other systems. I believe we have also shed more light on this in our previous slide. Benefits of contract automation tools. So here it's clearly seen that we have numerous benefits of contract automation. Automating manual processes can be said to be the first because it reduces the need for manual data entry, review, and approval. It automates the whole process of drafting a contract, standardizing contracts, increasing speed, improving compliance, enhancing visibility, reducing costs. It minimizes manual labor, proper and storage costs, improving relationships, electronic signatures, template management, clause libraries, contract analysis, integration, scalability, amongst others. Next slide, please. Factors to consider when selecting a contract automation tool. This is very important because in as much as we have talked about contract automation, it's necessary for us to know the key features that we're looking out for when we're selecting a contract automation tools. We have integration with existing systems, customization capabilities, user experience, security and compliance, scalability, cost, and ROI. So you need to make sure that the tool is simple to use. It could easily work with other software you already use. The tool must protect sensitive data. It should allow customization to fit the specific need of your business, such as creating tailored contracts, templates, and so on and so forth. We have come to the end of our presentation, I believe. Thank you for listening. Thank
All
you.
right. Thank you so much. Thank you so much, group presenter, and well done to you and group two, and every member that participated in putting together that presentation. So moving forward, I can see we've gone a little bit far, and our time is almost fast spent. But then, we will be taking feedback. Okay, I think we should just do it like a two-in-one. A two-in-one setting where we take questions and we hear feedbacks from the mentors so that we can quickly wrap up the session for today. I think Mr. Raphael said he has another engagement and has to leave. Thank you so much, sir, for your time. So now we want to give opportunities to our mentees to ask questions. Right, there were two questions that was sent to the group. Sorry, just kindly a moment. Let me get the questions and post them on the platform. Sorry about the little delay. Oh, all right. Miss Blaine too also has to go. Thank you so much for your time. Sorry, we couldn't get response to you on the questions. Okay, I think since Mr. George is still here, we would just like to have Mr. George take the questions and also give us some form of feedback to the presentation while he takes the questions. So please, you can also ask live question while we are taking this question, or you can send more questions to the chat box. So, Mr. George, to Mr. George, the first question here is, some time ago, I heard data analysis are important for building proficiency in fintech. Now, my question is, how do fintech companies balance data analysis with protecting sensitive user information? Mr. George, are you still with us?
Yeah, sorry. Can you take that again?
Yes, so the question is, how do fintech companies balance data analysis with protecting sensitive user information?
Well, if I understand what the question is referring to, basically, um, it's all about access. Who is authorized to access data, right? And even when you're doing any form of data analysis, right? Who has the visibility of what you are analyzing, right? Um, access to data and access to databases are something that they take very, very, very seriously. So most of the time, you see people have different authorization levels to be able to access data in any particular fintech. So basically, authorization levels are looked at, and then but when they are also doing like analysis, data analysis, right? They also try to anonymize those data a lot of time so that the analysis they are doing is at a general level. It's not particularly while is using the data of the individuals or the data of the customer is not particularly bringing out their information, right? So if you're looking at the data of the people that have attended this particular session today, there are several analyses you can do from that data without particularly identifying the particular people that attended the class, right? Without bringing out the information or the biodata of the guys that have attended the class. But you'll be able to run your analysis on them. So it's just a combination of anonymizing those data, right? So that you kind of put a bit of anonymity on the people that own the information while you're also using the information to do the analysis you're doing. And then ensuring access levels are well monitored. And of course, there's always an audit trail to know people that have access and that accesses the data at any point in time. In case where there's abuse of data or there's a leakage, then it can be well tracked. You get so, but while running data analysis, you basically want to secure, limit the authorization levels to the data, yeah, and then of course anonymize it as much as possible.
All right, thank you so much, sir. The second question here is, what measures can fintech companies take to respond to data breaches and cyber attacks rather?
Well, it depends on the nature of the breach and the nature of the attack, really. But most of the time, yeah, is first of all transparency. They try not to cause panic. That's why they try to withhold some of this information. But managing the communication is very critical, right? Managing that information is very critical because you also don't want to cause panic, right? So transparency, but at the same time managing the communication is a major thing. Then depending on the kind of data that was breached, right, you can invalidate some of those things that were taken and have the users come to make a reset. For example, password, right? You can invalidate all the current password in the system and then have people to come and reset their password before they access their account. Maybe ask them, do some kind of puzzle or in some kind of way, maybe hopefully some of the data that they can give you answers about, right? And they've not been able to they're not part of that breach ahead. They can use that to recover the account. So it depends on the kind of breach, it depends on the data that was taken and what is the use of that data. If it's data that can be killed off, like made invalid, the fintech would make that data invalid and then have the guys set new ones. If it's data that is permanent, that is static, like your name, your phone number, or whatever, right? It's just to make sure that new security measures are put in place, right? Verification levels are put in place to make sure that people now don't use that data to be able to have unauthorized access to the customers or the user's account. So the nature of the breach and the data that was impacted, right, would actually determine what needs to happen. But generally, you want to make sure that you can kill off those data as much as possible and then make customers set new things or put monitoring in place so that people will not use those data to access those customers, so that consumers' funds or anything that is protected depending on the kind of service that they're accessing from that fintech.
All right, thank you very much, sir. So sir, before we close, right? So sir, we would like to, since you are the only mentor on call currently, we'd just like for you to give feedback to the presentation and just give us more like a closing statement just to wrap up with today's topic so that we can call it a close to class.
Okay, thanks. The presentations were, listening in and in between though, but for the most part, they were quite well researched, put together. They could do a little bit better on the flow, like how the thing flows, so that someone is easily following without getting lost. Especially trying to mix both contract in the traditional settings and smart contracts in the blockchain settings, right? Space. So they can do well to be a little bit more deliberate in how the presentation flow, because structure of a presentation is as important as the content, because you might have quality content, but how you structured it, someone might get lost following you, right? But when you make the flow one that everything just flow, you carry the person along your presentation. So yes, good information that they were giving, but I think they could just do slightly better on how the flow of the presentation goes subsequently, so that it just helps your followers that have not been part of your very extensive research in putting that thing together. But overall, pretty much a good work done, especially in trying to fuse in those different perspectives of contract. The one in the traditional space and the one in the digital blockchain space, the new space. So well done to the guys. And then as a closing remark, just to say that a lot has been extensively said on contract, right? But just to say that whether we are on the legal side of things, right, where you're the one advising the fintech, whether you're the one advising the person or the organization, or whether you're the one that is actually driving the organization as the fintech owner, right? It's very critical to be very deliberate around how you attend to things around contracts, because that would basically define or make or mar any particular fintech, right? Whether it be that you sign commitments that you can't fulfill,
or you find things that are detrimental, right, towards what it is that you're trying to do, or things that were probably not completely evaluated before you sign them. So it's very critical that, regardless of whether it's the traditional space, even the smart contracts that you want to be part of putting together, because once they are executed, you can't change them. So you have to be very deliberate in making sure that you're very clear, very, very clear around the terms of whatever contract it is you're putting together, whether it's for the partners or whether it's for customers and clients. It's very important that you're very deliberate. Either someone that's advising them as a legal person or the owner of the organization or the fintech itself. So and I look forward to any other yeah, I look forward to us, expanding our conversations around this subject. Very, very good work you guys are doing. And of course, for the class and the audience participating here, it shows a willingness to want to keep growing expanding their knowledge. So well done to everybody, and have a very good afternoon and a very beautiful holiday.
All right, thank you very much, Mr. George, for that closing remark and
Thank you, sir.
everything. But just before we go, sorry, before we exit the call, please, we haven't taken our group picture yet. So please, we would like to just take that quickly before we exit. So I would like to call on the mentees to kindly turn on their videos so that we can quickly take a screenshots and then wrap up completely. Thank you, Fatima. Thank you, Blessed. I'm sure we have more people on this call. So thank you as you turn on your videos. Thank you, Samuel. Thank you, Kim. Sorry if I didn't get your name correctly. All right, so please. Well, I know we are very serious people, but we can smile a little. All right, thank you. Sorry, one more minute. All right, that's it. We're done with that. I want to just kindly remind you before you go that next week we'll officially be having the last class as tied to the fintech space. Right, the subsequent classes from there will be combined classes with the other mentees in the other group. So kindly pay notes to that and do well to just put in the effort so that you can fully gain the full information that we have to offer as regards this fintech space. So next week topic is going to center around the IP protection for fintech, right? For the fintech industry. So do well to pay attention to the rules that will be sent to your group. Also do well to. I also like to ask that you do well to carry out your presentations and also carry out your research, your personal articles, if you are assigned to do so. Work together with your team members so that we'll have a smooth transition in the next class. With that, we've come to the end of today's session. Thank you so much for being here. We appreciate your presence. To our mentors, Mr. George, Mr. Raphael, and Ms. Blaine, and Mr. Raphael and Ms. Blaine in Acceptual, we thank you so much for your time and efforts, for the information shared. I encourage mentees again to kindly revisit this class on YouTube so that you can get through the nitty-gritties of what have been said in class. So goodbye, everyone. Enjoy the rest of your day and take care.